Good afternoon, and welcome to today's 2-minute warning interview, where we take a deeper dive into the energy transition that's happening in the Middle East and indeed all around the world. My name is Tomas Valdez, and I'm delighted to have with us today Henning Gloystein, Director of Energy, Climate, and Resources at Eurasia Group. Henning, thank you for joining us today.
Thanks, Thomas. Good to be on the show.
Today, we're looking at the intersection of energy transition and geopolitical developments from around the world. A lot has happened over the past several weeks. Of course, too much to fit into one discussion, but we're going to seek to hone in on the key developments that shed light on the direction of the transition. And I'd like to kick it off by saying that there's been a lot of criticism directed at the West and at the US in terms of their approach to the energy transition, specifically from the oil and gas industry, who say that the West's policies are significantly impacting investments in oil and gas, which could lead to underinvestment and therefore jeopardizing energy security with potential energy shortages. And I wanted to start off by asking you your take on that and how you view that criticism.
Sure. I mean, I can understand where it's coming from because oil and gas, the industry is by nature, it's a long-term, a long-cycle industry. So you can't just produce oil or gas right now and then stop doing that in 3 years when you don't want it anymore. That's simply not how the industry works. So you need to invest money now to start producing into new assets in, let's say, 5 years. And then if you want a return on your investment, you probably need to run most of these assets for at least a decade or three. So, and this is a bit awkward for any government, especially in the West, as you say, that has net zero targets. And actually, the most hardest hit here are probably the Europeans at the moment, because they have net zero 2050 commitments. So by the middle of this century, they need to be by law net zero greenhouse gas emissions. That means they can't really commit to long-term oil and gas investments much beyond 20 years at the moment. But they also still need oil and gas for the next couple of years, even a decade or three. So this is a really awkward position that they're in. At the same time, of course, if you're on the sort of environmental side and green policy side, you say, no, we need all the money we can now to invest in the green solutions, whereas the oil and gas industry says, no, we need all the money for the next 20 years to make energy affordable. And this is a really, really complicated space at the moment. And I actually think it's going to be the most challenging aspect, or at least among the most challenging aspects of the entire energy transition for the next decades.
And if we look at it from a little bit more of a granular perspective, of course, the West is not monolithic, and Europe and the US often have differing priorities and objectives when it comes to geopolitics, and of course, when it comes to the energy transition. And I'm curious how you would differentiate the US approach versus the European one. I mean, would you say that they are more similar after all, or is it always important to distinguish between the two?
No, that's a good point. They're actually, I mean, the overall goal and direction is fairly similar. It points to decarbonization over the next couple of decades. But the way we're going to get there is very different between across the Atlantic. So the US has a different approach to Europe, quite significantly, actually. So in the US, there is a much more pragmatic approach to say, okay, the long-term goal is decarbonization, but that doesn't mean that in the short or medium term, we can't still produce a fair bit of oil and gas. Whereas in Europe, there's a much stronger sense to decarbonize as fast as possible. There's actually a really big difference in point of view here, of course, because the United States is one of the world's biggest oil and gas producers, and the European Union, or wider Europe as a whole, with a few notable exceptions, really isn't. So for Europe, it's an import reliance. So fossil fuels cost a lot of money, as we have experienced over the last year. Whereas in the United States, yes, of course, for consumers, fossil fuel costs a lot of money, but it also makes corporate America quite a lot of money in revenue. So there's really quite a big difference. And you can actually see that in the different approach of the European energy majors versus the American energy majors as well. So even on a corporate level, there's a fairly big difference in approach to the entire subject.
And I wanted to also move east towards Asia. Asia is predicted to account for 50% of global electricity consumption by 2025. So that's just 2 years away. That's not even, 2050, 2030 timeline. And China is expected to consume 1/3 of global electricity by 2025. Of course, coal makes up more than half of Asia's uh, current electricity generation. And I'm curious your view on how you expect, or if you expect, China's approach to coal or to renewables to evolve at all in the near term.
Yeah, it's already evolved. The price shock, especially in the natural gas side, so liquefied natural gas (LNG) last year, was so extreme, and it was a price shock, of course, that Europe triggered because it was cut off from Russian gas as part of the wider fallout of its Ukraine invasion. So the Europeans had to hoover the global market for LNG, and that impacted everybody in the rest of the world, including China. Their response has been that they've approved 3 million tons per year of additional coal mining capacity. And of course, if you start digging for more coal, that means you're going to use it, and not just for the next 3 years. So what the Chinese have done is they've taken a very pragmatic and domestically folk-centered approach to energy security and climate change. They say, okay, this price shock of imported oil and gas, but especially energy last year, means that China wants to rely more on domestically mined fuels in the short term. That includes coal, which is much dirtier than natural gas, but still investing into a massive greening of its industry, be it electric vehicles, solar, and so forth. So they're kind of taking one step back, once, and then two steps forward. But you can actually see, yeah, I mean, I totally agree. The China has already adjusted its energy transition, which includes more coal use in the short to medium term, while still trying to keep the green industry or green transition in focus. And this is wider Asia as well. India, which of course this year we now know will almost certainly become the most populous nation on earth. They're doing the same thing. They're mining more coal again, reducing their LNG imports because they just looked at the price and said, "Goodness me, let's import less LNG and burn more local coal until we can finance the green transition." So this is across the world, and as you say, across Asia, which is the biggest consumer of every form of energy and raw material by far.
And like you said, coal remains very prominent in Asia, not only in China, but in India and other Asian markets. And on the other hand, there is this increasing focus on renewables at a global level, not just in Europe and the US, but also in Asia. And for example, here in the Middle East, we hear a lot of the potential for solar capacity. But when it comes to Asia specifically, I'm curious if you think that there are any particular alternative energy sources that are worth keeping an eye on in the next couple of years, whether that's solar or hydrogen or hydropower or anything else that comes to mind.
Yeah, all of the above. So Asia is a huge region. So in some areas, large parts of India, Thailand, South and Southeast Asia, solar power works incredibly well, almost as well as in the Middle East. In other areas, it's not quite as sunny. So take Vietnam, for instance. Its solar potential is still big, but it's not that big because of intensive cloud cover. But Vietnam's wind potential is huge. And then you go further into Southeast Asia, it becomes geologically very active, which means thermal power is a huge source of potential, untapped electricity. Indonesia, the Philippines, could produce vast sums of this. And we know China is already deep down the hydropower route. They've built the biggest hydro dams in the world. I know that comes with heavy criticism attached as well in terms of real environmental impact. But so absolutely, I mean, Asia Pacific, the area has vast potential of untapped renewable energy resources. And of course, these all mean that you can also go down the hydrogen route, because you can turn renewable electricity from wind and solar and geothermal power into hydrogen via electrolysis. And you can also, of course, use natural gas to generate hydrogen, blue hydrogen, by using carbon capture technology, which some of the oil and gas producers like Malaysia are already looking at.
And I wanted to bring in the geopolitical perspective as well, a little bit more into the conversation. Big news this week, Chinese President Xi Jinping is meeting with his Russian counterpart, Vladimir Putin, starting today, I believe, and energy is sure to be on the agenda. And I wanted to ask your take on the meeting. It's their 40th in-person meeting, so they're very familiar with each other at this point. But from the geopolitical lens, do you think that this particular meeting is pivotal in any way for their energy relationship, or is it a continuation of the status quo?
No, it's an important meeting. I mean, Xi Jinping, as you say, and Putin have met quite a lot, but this is a 3-day state visit. So it's clearly it's a political signal by China that it pretty much stands by Russia. Now, the question is how openly they become involved in trying to mediate in Ukraine, or maybe even trying to support Russia financially or militarily in Ukraine. So it's a really important couple of days. We'll be looking at what's going on in Moscow very closely. In terms of energy, I think it's pretty clear that China will try and take advantage of the fact that the West, and in particular the EU, is not buying Russian oil or refined products anymore. They've also been pretty much cut off Russian pipeline gas, which means that the Russians will try and sell this elsewhere. Yes, India has been buying quite a lot of oil from Russia as well, but we just saw Russia overtook Saudi Arabia in 2022 in the first couple of months of this year as China's biggest oil supplier. China has already said they're going to build a new gas pipeline connecting it with Russia, so a second one, and that they will take more seaborne oil and gas as well from Russia. It's a natural sort of geopolitical split, and it's a natural conclusion of the divided geopolitical world we're facing. In the Western world, Europe's biggest oil and gas suppliers are now both NATO partners, the US and Norway. And China's biggest energy and raw material supply will be Russia. So I think this is going to be fairly permanent, and the Chinese will sign probably quite a lot of deals in the next few days. I wouldn't be surprised.
And of course, China, the past week or so, has made geopolitical headlines for numerous reasons, not only because of Russia, but because they brokered this rapprochement that we're seeing now between Saudi Arabia and Iran here in the Middle East. And it's largely seen as a move to elevate its geopolitical clout, but also to strengthen relations with these major oil producers. How would you describe China's ambitions in the Middle East when it comes to securing its own energy needs, but at the same time maintaining momentum on its other economic priorities, like building ports along the Arabian Gulf?
Yeah, I mean, it's a remarkable step because China in the past has been more of a regionally politically active player, and sort of the geopolitics were actually, it didn't cover the whole world. It was basically an Asia Pacific player, and now it's brokering some form of deal in the Middle East between Iran and Saudi Arabia. It is interesting because we don't think the United States in the current geopolitical environment would have been capable of doing that. In some sense, it's positive if two big regional rivals talk rather than fight. That's positive. But of course, for the United States, this is a bit of a setback because China is brokering a deal in an area where the United States is, over the last decades, been the pivotal and essential deal broker. And China stepped up here. Now they're stepping up with Russia, and they have this peace plan for Ukraine, which the West has pretty much totally dismissed. But they are engaging geopolitically in an area which is basically Europe. So it's quite a strong increase, quite a big increase and significant increase in China's global presence politically and economically. In Belt and Road Initiative, we've seen that before, but now in real power brokering, that's a step up, and it's definitely worth keeping an eye on. But it's also, worth from a Western point of view, not to totally dismiss and say, oh, this is bad, because like I mentioned, if the fact that China helped, at least even if it's just temporary, but if Iran and Saudi Arabia communicate more, that's not necessarily a negative outcome, is it? So not all about this is bad.
Right, and definitely more developing on that front. And if we take it back a little bit more towards Europe, European Commission President Ursula von der Leyen recently announced the Net Zero Industry Act to scale up manufacturing of clean technologies in the EU and to make sure that the Union is well equipped for the energy transition. I'm curious how competitive you think Europe can actually become in this field, given that it's currently experiencing high energy prices. Is Europe being too ambitious with its plan to transition away from oil and gas so quickly?
I actually don't think Europe can be too ambitious, and we'll see whether the ambitions are viable. We'll have to wait and see. But the ambition for Europe must be to become a net zero industry powerhouse, because it has heavy industry, and that has in the past relied on oil and gas imports, affordable oil and gas imports, and the current conditions don't really provide that very well anymore. Although it must be said that conditions now, as we sort of March ends 2023, are already much better than they were last year. And we did actually see European industrial manufacturing did not actually decline. It actually increased a little bit last year, despite the sky-high prices and despite a drop in heavy industry output like chemicals. But overall, I mean, this has happened without a recession. So last year was terrible. This year looks going to be painful. But I do think comes the middle of this decade, so around 2025, Europe has a chance. We'll have to wait and see whether it achieves it, but to maintain its competitiveness. They are investing in more oil and gas access from Norway, from the United States. It comes at a premium, but of course that high price sends the signal politically and economically to invest into alternative local clean energy supply sources, be it offshore wind in the North Sea, concentrated solar in Iberia, clean hydrogen. There is now natural gas as part of clean hydrogen because as part of that net zero policy, the EU has officially now endorsed carbon capture and storage, which will enable ongoing use of oil and gas as low carbon solutions. You know, it will access more oil and gas, but it will have to generate more local sources of clean energy production and storage. But come the middle of this decade, if they do it right, they could benefit greatly from this because they're investing into improved efficiency, so using less energy while still producing the same amount of goods. They're investing into new oil and gas resources, and they're investing massively into a green transition. So the concept here is to front load all the capex, so the capital expenditure, so they bring down the opex in a few years, and this does stand a chance of working. But we're a little bit, it's a bit early to say, because also Europe's industry has other problems than that. There's a really burdensome regulatory process. But I think the shock of the last year has put Europe in a semi-decent place to actually address some of those problems, especially in terms of energy. So I'm cautiously optimistic about Europe's energy, actually.
Well, definitely 2030 will be a pivotal year because not only for the EU, but a lot of countries around the world have targeted that specific year for meeting certain criteria for the transition. Meanwhile, you know, as we near the end of the conversation, just to bring it back to the US once more, and the US super majors, they're taking a slightly different direction. And ExxonMobil principally comes to mind. The largest US oil company has no renewables in its portfolio, and its CEO, Darren Woods, seems to be adamantly against the idea. And sometimes it seems hard to counter his arguments because Exxon's share price, for example, rose about 70% in 2022. And sometimes the question arises is, does it even make sense for US super majors to include renewables in their portfolios, which is an area where they have much less competitive advantage and expertise compared to a lot of other up and coming renewable focused enterprises? And I welcome your thoughts on that question as well.
Yeah, it's, I mean, you know, I don't give advice on certain companies, but the fact is, of course, that most investors buy stocks in oil and gas companies not because they think they're great renewable energy companies. It's a simple matter. And Exxon looks at its portfolio and says we have a really good oil and gas production portfolio, and we don't want to compete in making wind turbines. There's companies who do that really well. So that's, I mean, it totally oversimplified their approach, and it works well. They've and they are, though, very heavily involved in CCS, so carbon capture and storage solutions. So they see their own path as an oil and gas producer, as far as I can see it, more in terms of ongoing use of decarbonized fossil fuel sales. And I just mentioned, you know, the European Clean Industry Act now sees that as part of the solution. So they probably see that confirmed. European oil and gas majors have also adjusted a little bit towards more towards that, but they have a very, very different situation. I mean, the risk of climate litigation in Europe is much higher. They have legally binding targets across Europe. If they want to continue operating in Europe, they must totally decarbonize within the next decade. So they have a real legal obligation and political obligation to decarbonize much faster than US companies. And I think that's one of the biggest difference between the two. Yes, they all produce oil and gas really well, but by nature of where they're from, it puts them into a slightly different position.
And one final question as we approach the end of our time together is, government mandates aside, if we look at it from the global level, do you think there might be a divergence for oil majors in strategy where some do end up embracing renewables and incorporating it pretty profoundly into their product portfolios, whereas others continue to shun it the way Exxon has and continue to move forward without them?
Yeah, I definitely think there'll be an ongoing divergence. It's already the case, and I think there's a chance, a fairly high chance, that this will diverge even further. Because we have mentioned these national oil companies, of course, especially in the Middle East, but not just there. They have a totally different view of the world again. So there's even within the NOCs, the national oil companies, some have a different outlook and are a little bit green in the outlook than others. So I think there'll be very different policies. Some will say we want to produce as much oil and gas for as long as possible, pay a dividend for as long as possible to either our government or our shareholders, and then eventually, at whatever stage in the later this century, maybe fold up as the need for them ceases to exist. But that's quite far away. And others try and transform themselves into new companies. So the most famous example is probably Dong, so Denmark's former national oil and gas company, which is now Ørsted, and one of the most successful renewable energy companies. But not every oil and gas company will successfully be able to do this. They can't all become green energy companies, and I think this is where the divergence is home to. And it'll be interesting to see which ones sort of do knee-jerk U-turns and which ones continue down the route that they have always planned. It'll be fascinating.
So absolutely a bifurcation in strategy, let's say, where in either direction, some will fail and some will succeed. So more to come on that, but that's all we have time for today. Thank you very much, Henning Gloystein, for joining us this afternoon. We really appreciate your time and your expertise, and we look forward to engaging with you again in the future.
Thanks a lot, Thomas. Thanks.